XRP to $500. XRP Ripple just beat the SEC. Extreme warning to XRP investors. JP Morgan, XRP today. Hello guys, welcome to the channel. Today in this video, we are going to discuss if XRP is going to $500. Also an update on XRP and the SEC case. But before we start, make sure to give this video a big thumbs up. And if you're new to the channel, don't forget to subscribe before leaving. Also, hit that bell icon so that you can get notified whenever we will upload a new video. For now, let's get back to the video straight away.
You want to win an iPhone 12, maybe a MacBook Pro. How about $500 cash? You decide. All you have to do is comment the secret hidden message somewhere in this video and leave a like on this video and subscribe to the channel so we can keep affording these giveaways.
It seems like a no-brainer inside the Securities and Exchange Commission last December when the agency filed a lawsuit charging one of the biggest players in crypto technology, Ripple Labs, violated securities laws. Then Chairman Jay Clayton signed off on the case just hours before resigning from the SEC following the defeat of Donald Trump in the 2020 presidential campaign. That made the timing a bit odd since big decisions in government are usually left to the incoming administration to sort out. But the SEC's enforcement division has a reputation for being independent, with staff attorneys remaining in their roles no matter who is in power. And the enforcement staff was united in their decision to file, while the 5-member commission voted 3-2. Ripple executives had, according to the SEC's lawsuit, brazenly ignored warnings from the commission that when they sold the $1.3 billion worth of XRP, the digital coin used on the Ripple platform, they were violating securities laws because the sales weren't registered with the commission and disclosures to investors weren't provided, contrary to mandatory prerequisites for whenever a company sells the security. XRP was a security in the SEC's view, just like a stock or a bond, because it was being used to finance the build-out of Ripple's platform and enrich its top executives. The company could settle with the commission, as most do. Even if the price is steep, it would have to reproduce $1.3 billion in XRP that the SEC believes illegal. Or Ripple could fight it out in the federal court, and a battle SEC staff attorneys were confident they would win. It didn't seem to matter that the SEC action would hammer not just Ripple, but average people who purchased the now suspect XRP digital coin. Well, not so fast. Yes, most SEC targets choose to settle rather than spend their money fighting in the courts, but not Ripple. Its CEO Brad Garlinghouse and General Counsel Stuart Adelrody chose to fight both in the courtroom and the court of public opinion. They hired a dream team of legal talent and top lobbyists and crafted a compelling public relations campaign that the SEC's lawsuit is nothing more than a prosecutorial overreach, wrong on the law, and so riddled with conflicts of interest that, if successful, it would benefit its competitors and stifle crypto innovation. Things are now getting nasty as both sides head to court. The SEC is taking issue with Ripple's voluminous document requests from the commission, comparing them to harassment. Ripple says the SEC has abandoned its role as an independent regulator and has overstepped its authority. Legal experts question whether the SEC's time could have been better spent on other issues. With neither side looking to back down, the case is likely headed for trial, possibly early next year. The US financial industry is one of the most regulated businesses in existence, so it only makes sense that the rapidly expanding crypto business is attracting regulatory scrutiny from other layers of the government and the SEC, also known as Wall Street's top cop. The bedrock of the SEC's enforcement agenda is disclosure, mandating that sales of investment contracts that are legally deemed securities be registered with the commission. The company makes public necessary financial information. Crypto is, of course, an industry-created alternative to heavily regulated centralized finance such as banks, but regulators couldn't ignore its growth. In 2018, for instance, the industry barely cracked a valuation of $400 billion. Today, it exceeds $3 trillion. For context on its size, there are currently more cryptos in circulation than US dollars. Treasury Secretary Janet Yellen says crypto is being used for illegal purposes since digital coins are used to price transactions secretly through decentralized blockchain technology that skips over costly intermediaries and many government checks. SEC officials believe investors in crypto need more disclosure, not less, about the industry's various blockchain technologies and the digital coins themselves. But there's always a but. Regulation has been known to slow innovation in emerging technologies. Industry proponents say that the crypto business holds out the potential to be the next internet for all the talk about the bad stuff. Illegal activity occurred on the web, but the government allowed its development to flourish. Suppose cryptos and blockchains can survive meddling from regulators. In that case, it will create a whole new ecosystem for transacting everything from buying a pizza to buying a house through the decentralized blockchain technology. In what shape crypto and blockchain survive could well come down to the SEC's case against Ripple. The case launched by Clayton, former President Trump's SEC chair, is now one of the top priorities of the current SEC chairman Gary Gensler, a Biden appointee. Suppose the SEC can prevail in federal court before Judge Annalisa Torres in the Southern District of New York. In that case, it will go a long way to establishing the agency as crypto's primary regulator, imposing what industry executives believe is the SEC's traditionally heavy-handed oversight approach, possibly demanding massive amounts of disclosure in a business that prides itself on being alternative to government control. It could, for example, go back in time and determine whether other crypto companies that conducted their operations and sales of digital coins in much the same way Ripple did similarly violate the law and now must pay up as well. Regulators, not the markets, will be choosing winners and losers based on arbitrary interpretations of the law and based on relationships with powerful players in the crypto business. More on this later. Critics of the SEC said, even worse, crypto innovation could be stifled in the US and move offshore to places where government isn't demanding financial disclosures. China, fighting for dominance of the world economy, could gain a key advantage in developing game-changing technology. If Ripple wins, the stakes are just as high but in different ways. Yes, innovation could flourish as the SEC cedes control to the Commodity Futures Trading Commission, the regulatory body that regulates commodities with a much lighter regulatory touch. Blockchain might just become the new internet, a transformative technology that can replace traditional banking in other ways people buy and sell stuff. Yet, so will be the myriads of ways criminals use crypto, given the largely anonymous nature of blockchain technology. And does the US government want to allow a new form of money to be created that directly competes with the US dollar? For much of his tenure as chairman of the SEC, Jay Clayton grappled with how best to regulate the rapidly expanding crypto business. And for the most part, the former securities lawyer for the white shoe firm Sullivan & Cromwell took a measured approach, cracking down on obvious frauds but allowing the crypto business to bloom without significant government intrusions. At the top of his enforcement agenda were his lawsuits against the initial coin offerings, ICO, that were traded like securities without SEC approval and with false promises of massive profits to come. He brought enforcement cases against instant messaging platforms Telegram and Kik for selling alleged unregistered securities, which resulted in Telegram abandoning its separate crypto operation and returning $1.2 billion to investors. Kik was ordered to pay a $5 million fine and was later bought out by Media Lab. Both companies neither confirmed nor denied any wrongdoing, and press officials did not return requests for comments. All told, the Clayton SEC brought 87 crypto-related actions, a significant tally, mostly involving ICOs that traded like stocks, but their sales were not registered with the commission, making them essentially illegal. But one stood out from the pack, Ripple. It was Clayton's final act as chairman of the SEC and would emerge as the most important and controversial, a regulatory marker for the nascent industry. Delivered just hours before Clayton would leave the post on December 22nd of 2020, the SEC filed an enforcement action against Ripple and its two senior executives, Brad Garlinghouse and Chris Larson. for failing to seek SEC approval and registering sales of XRP cryptocurrency while using profits to build out the Ripple platform. The move made sales of XRP illegal in the Commission's eyes and put Ripple possibly on the hook for $1.3 billion, the amount of XRP the SEC believes was illegally sold. The move also immediately raised eyebrows in the crypto world, which was on its way to becoming a $3 trillion business. For starters, the SEC didn't appear to have broad regulatory powers in the crypto space. That role belongs to the Commodity Futures Trading Commission, also known as the CFTC. While regulators were concerned about the fraud and abuse in the crypto business, Ripple wasn't a sham. Its underlying technology facilitates cross-border payment using XRP, which was then rivaling the largest digital coins, Bitcoin and Ethereum, for dominance. Speaking of Ethereum, its founders financed their build-out in 2014 through an ICO of the Ether token. Ripple's lawyers had long concluded that the XRP sale was even less a security than Ethereum's Ether digital coin. Ether issued through an unregistered ICO. Ripple raised money to fund their business initially through venture capital. Ripple vowed to fight the case, but its business in the US came to a near standstill and it was forced to expand overseas and make up for the losses stateside. As a result of the lawsuit, holders of XRP were caught in a regulatory purgatory. Exchanges like Coinbase and Crypto.com suspended trading so they couldn't cash out. Losses to small investors and project developers using the XRP ledger was said to total $15 billion. That's it for today, guys. We will see you next time. Until then.